You know, when you look at Kenya's growing skyline, all the new buildings and infrastructure, and you think, wow, how can I be a part of that? Well, the answer is right there in our capital markets. Over the next few minutes, we're going to pull back the curtain on this powerful engine of our economy and show you that it's not just for the experts, it's for you.
So, how do you do it? How do you actually take your savings and turn them into real investments that help build the country? That is the big question we're tackling today. And look, this is not about complicated financial jargon. This is about giving you the tools to make your money work harder, both for you and for the nation. All right, let's jump in. Here's our game plan. First, we'll talk about the big picture, why these markets are so important. Then, we'll introduce you to the official referee. After that, we'll explore what you can actually invest in, how you're protected. And finally, we'll lay out the first steps for you to get started. Okay, so first things first, why should you even care about capital markets? Well, it's all about turning our individual savings into this massive collective force that drives the whole country forward. Think of it like this. You've got your short-term savings, right? That's the money you keep safe for rent, for emergencies, immediate stuff. But then there's long-term investing. That's where capital markets come in. It's about channeling that money into the big, productive projects that build our future and build your wealth over time. And you can literally see that connection right here. The market is like this huge pipeline, taking the savings from thousands, maybe millions of people just like you, and funneling it directly into financing the things that build our nation's future. We're talking everything from new highways to groundbreaking tech startups. It's the link between your savings account and tomorrow's skyline. But wait a minute, with all this money flying around, who makes sure everything is fair and nobody's cheating? Well, that brings us to a super important player, the markets regulator, the Capital Markets Authority, or as you'll hear it called, the CMA. Now, the CMA isn't just some random organization. It's an independent public agency, and get this, it was created by an act of parliament. That's a big deal. Their one and only job is to regulate, license, and supervise the entire industry. Simply put, they are the official watchdog, making sure it's a level playing field for everyone involved. So what does the CMA actually do for you? Well, their mission is all about you, the investor. They make sure there's fair play, they regulate all the products you can invest in, like shares and bonds, they push for innovation, and they work to educate the public. In fact, this whole explainer is based on one of their handbooks. But above all else, their number one job is to protect your interests. Okay, now for the really fun part. We know why the market is important, and we know who the referee is. So how can you actually get in on the action? Let's check out some of the most accessible ways you can participate. One of the most popular ways to start is with something called a collective investment scheme, or CIS. It sounds complicated, but it's not. Instead of you trying to figure out which stocks to pick all by yourself, a CIS lets you pool your money with a bunch of other people. Then, a professional fund manager takes that big pool of money and invests it for you across a whole range of different assets. It's like diversification on autopilot. Honestly, the easiest way to get your head around a CIS is to think of it as a professionally managed, superpowered chama. Seriously, just like in your savings group, everyone puts their money in together. The big difference here is that you have an expert, a professional, whose full-time job is to manage that pot of money and make it grow for everyone in the group. Another fantastic option is a bond. Now, when you buy a bond, you're not buying a piece of a company. You're actually loaning your money to the government or a big corporation. And in return for that loan, they promise to pay you back with regular interest payments over a fixed amount of time. It's as simple as that. And you absolutely do not need a fortune to start. Just look at the Amakiba bond. This was a government bond for infrastructure projects, and the minimum investment was just 3,000 shillings. And the best part? You could buy it straight from your phone. That just shows you how accessible investing has really become. Now, let's tackle a huge question that every single new investor asks. Is my money going to be safe? It's a totally fair question, so let's talk about the safeguards that are in place to protect you and your hard-earned money. And this isn't just something they say. Right there in the CMA's own handbook, they define investor protection as their core role, making sure the funds and interests of every single investor, local, foreign, everyone, are secured. It's not just part of their job, it is their main purpose. So what if something goes wrong? Well, there's a clear, step-by-step process you can follow. First, you contact the company you're dealing with directly. If you're not satisfied with their response, you can escalate it to the Nairobi Securities Exchange. Still not resolved? Then you file a formal complaint with the CMA. And beyond that, there are even more options, like a special tribunal or the courts. The key thing to remember is that there is a system in place. There's always a path forward.
All right, we've covered a lot of ground. You know why the market matters, who the regulator is, what your options are, and how you're protected. So let's bring it all home and talk about the final step, how to actually start your own investment journey.
Okay, before you invest even 1 shilling, please commit these rules to memory. 1, always read the fine print. The offer document is your best friend. 2, only, and I mean only, deal with firms that are licensed by the CMA. 3, don't let anyone rush you into a decision. Take your time. 4, keep good records of everything. And 5, maybe the most important of all, understand the risks before you put your money in. Remember, your best protection is always your own knowledge.
So there you go. You now have a map to help you navigate Kenya's capital markets. It's a system built to take our savings and fuel our country's growth, with a strong referee to keep things fair and options that are accessible to everyone. The only question left is, where will your investment journey begin?